In recent years, proponents of tax increases have argued that the US and other countries prospered in the past despite extremely high taxes on the rich. They point to the 1950s and early 1960s when the top federal personal income tax rate in the US was a staggering 91%, and argue that high taxes do not harm the economy. However, as Phil Gramm, Robert Eklund, and John Early show in their book The Myth of American Inequality, the top income tax in 1962 was effectively only paid by 447 tax filers out of 71 million, and the top 1% of income earners on average paid just 16.1% of their income in federal and payroll taxes. Even when the top tax rate was lowered to 70%, not much changed. Only 3,626 out of 75 million taxpayers actually paid taxes up to 70%. Interestingly, the actual percentage paid by the top 1% of earners in the US was only 16.1% in 1962, when the top marginal rate was 91%. However, in 1988, when the top rate was only 28%, the percentage paid by the top 1% of earners had risen to 21.5%. This seeming paradox is explained by the fact that it's not only the tax rate that is decisive, but also the amount of income that is actually taxable. In the pre-Reagan era, there were numerous exemptions, loopholes, and tax-saving schemes that top earners could use to reduce their taxable income. Reagan abolished many of these opportunities, thereby increasing the proportion of income that was subject to taxation. The Reagan-era tax cuts likely contributed to the higher economic growth rates experienced in the 1980s. During the Reagan years, economic growth averaged 3.2% per year, compared to 2.8% during the Carter-Ford years and 2.1% during the Bush-Clinton years. This growth was a direct consequence of Reagan's deregulation and tax reform policies in conjunction with falling oil prices. So, in summary, the myth that the U.S. experienced strong economic growth when the top marginal tax rate was high is false. The top marginal tax rate was only nominally high because there were so many exemptions, loopholes, and deductions. It was the elimination of these tax breaks, along with Reagan's deregulation and tax reform policies, that led to higher economic growth and increased tax revenues. Subscribe Libertarian Facts.